Hello traders, the title of this video is Stock Market Earnings, Stocks Set for Earnings Upside. Let's get started. We are on a monthly chart of Johnson & Johnson, an American stock that belongs to the New York Stock Exchange, especially to the Dow Jones Index. The epic for Johnson & Johnson is JNJ, Juliet, November, Juliet. And today we want to talk about stock market earnings, stock set for earnings upside. So we know that if we go to the quarterly chart, all right, a quarterly candlestick bar is closed, and many companies will start reporting their earnings for the first quarter of 2017, okay, to the market. So you have to understand that it's quite challenging, okay, to trade the first month of any quarterly candlestick bar, all right? So when a quarterly candlestick bar is closed, which means end of March, it's quite challenging to trade during, okay, April. All right, understand that. All right, it's quite challenging to trade in July. Okay, it's quite challenging to trade in October. It's quite challenging to trade in January because the first month of each quarter is quite challenging to trade because of the earning result coming into the market. All right, so you need to understand that if you trade stock. So I was telling traders before, one thing we know, okay, as an area way traders, all right, so the first area way, we can use the first area way to determine, to forecast the whole multi-way. But this is strange to me, according to my observations. I've noticed that even this is true in many things, because when you are day trading, all right, it's quite challenging to trade the first day of the week, which is Monday, all right. It's quite challenging to trade the first week of the month, all right, very, very challenging. It's also quite challenging to trade, all right, the first month of each quarter, all right. So going back to our main topic today, stock market earnings, there is an article written by barons.com, a very, okay, essential website for financial market traders. I recommend barons.com. You can subscribe to barons.com. I need to remind traders that I have no relationship with barons.com, all right? So I like the article by barons.com, all right? And there is an article here, all right? And they haven't put the name because this is for subscribers. They only give a portion or a section of that article, which I have here on my smartphone, all right? And the article is that Johnson & Johnson set for earnings upside. So you may say to me, George, I'm a technical trader. I'm off. I don't want to know more. I'll encourage you to stay with me. Or you may say, George, I do not trade Johnson & Johnson. I'm living in India. I'm living in Europe, and I don't want to know it. I encourage you to watch the full length for this video because it's educational video for all stock traders, and you will know, you'll find out very shortly, all right? Johnson & Johnson by Wells Fargo Securities. So Wells Fargo is international banking and financial services holding in the United States, all right? It's the third largest bank by assets in the United States. It's the second largest bank in the world by market capitalization. This is about Wells Fargo. According to Wells Fargo Securities, all right, they are raising, okay, the valuation range for Johnson & Johnson to 139, between a range of $139 and $141. So you can see here that the price is now at $124.27. So according to Wells Fargo, Johnson & Johnson has okay, more upside to come, and they set a price range between 139, so where it is now, probability, high probability, according to Wells Fargo, not to me, that the stock may go up to 100. I'm going to put it exactly there, $139. I'm going to do it exactly. You're going to stay with me, please, as I'm playing with this. All right, stay with me, please, my friend. All right, get in there, 139, put it there, took, and between 139 and 141. Okay, next key, next target, so it's a range, 141. Okay, somewhere just a little bit above it. All right, a little bit above it. I'm going to do it again, exactly level. All right, very bullish for Johnson & Johnson. Here it is, 139 is the first line. Try to color that into red. All right, and the second line, I'll color it into pink. All right, here it is. So that's the price target that Wells Fargo has set for Johnson & Johnson. Now, you may say, Joe, what do you have to say to us about Johnson & Johnson at this point in time? So those are market analysts, experienced market analysts, all right, at Wells Fargo Security, setting a price target for Johnson & Johnson for the range of going price targets. First price target 139, second price target 141. So that this stock has more chance to go up. All right. So because the earnings for Johnson & Johnson plans to report first quarter earnings on the April 18, 2017. So today is the 11th of April 2017. So exactly how many days left? Okay, in 7 days time, on the 18th of April 2017, Johnson & Johnson will release their earnings. So what usually takes place is that when the earnings exceed the analyst forecasts, all right, is theoretically speaking, is bullish for that company, is bullish for that stock, all right. But if they fail to meet the analyst forecast, theoretically speaking, is bearish for that stock. Sometimes, as I explained yesterday in one of the videos, that the market is always looking ahead. So if, for instance, a company exceeds the analyst forecast, sometimes you may notice that the price may go down instead. In that case, you will know that it's already priced in the price, but at the time when the news is released, that the company released their earnings, all right, and they still exceed the analyst forecast, the stock will go down because it's already priced into it, and those who took position at early stage will come out and the stock will come down. So you may be wondering, oh, this is a bullish news, how come other traders are selling? But it's because the market is looking ahead and they already priced that good news into the price already. So on the day when the news is released, the stock will go down instead. The opposite is also true. Sometimes you may have a company that failed to meet the analyst forecast, but on the day when the news is released, the stock will gap up and even go up, and you'll be wondering what's going on, why people are so crazy. Is it market manipulation and so on? But sometimes because the market has already or market participants have been selling the stock. So suppose you were here, they were selling, prior reaches the support level. All right. At that point in time, the company came out and released their earnings, and they have failed to meet the analyst, to exceed the analyst forecast, or to even meet the analyst forecast, which is in fact a bearish financial news. But as that bearish financial news is released, the stock continues to go up, and people wonder what's going on. All right, because it's already priced into the price. So you may say to me, George, I had enough, I'm off now. I'll encourage you to stay with me because I have not yet finished. All right. So what I'm going to do today, we're going to look at Johnson & Johnson, technically speaking, and we're going to analyze why the analysts believe that this stock can go up to 18 times, all right, their earning per share. All right, I will be recording a video later on about earning per share. There are excellent ratios traders should use if they are paying attention to the earning per share. So The estimated earning per share for Johnson & Johnson is $7.78. Now, do you understand that? Earning per share, that's the dividend they can pay to you to shareholders, $7.78. So you have 1,000 shares, you may have $7,000 for dividend, all right? So I need to remind traders that want to sell Johnson & Johnson, please look for another stock to sell. I'll explain to you. The reason is that this stock has been bullish over the year and it's quite challenging to sell Johnson & Johnson. So if you come across a financial instrument that is quite challenging to sell, the best thing to do is not to fight it and just stay away from it and not to sell it at all. Which means those stocks that usually pay a huge dividend like Johnson & Johnson, $7.78 earning per share. What I'm talking about here is correction traders. Earning per share is the earning that the company gets from this one share. So more money per share, more revenue per share. All right, correction. Now the point I'm making here is quite challenging. In fact, Johnson & Johnson pay a huge dividend to their shareholders. All right, so for those stock, investors are buying that stock not for trading purposes, not for growth, but they are buying it because of the dividend. So they buy it at any price because they know that the company pay a big dividend. So they have 1,000 shares, or if they are paying $7 per share for dividend, that's $7,000, and a lot of investors will be buying those stock for salary purposes or dividend purposes. So if you are a technical trader and you do not know what's going on, you may go around selling those stocks. As you are selling it, other investors that are buying for dividend purposes will continue to buy the stock, and you will be taking out each time you are trying to short that stock. And Johnson & Johnson is a very good example about a stock that are quite resilient, that are very bullish, that is difficult to sell. All right. So this is it. So what's in store for Johnson & Johnson right now? I have done my area wave analysis for Johnson & Johnson, and it was quite complex to count the wave for Johnson & Johnson, and I don't want to go through it again. You can see that I leave this on my chart for almost a year, and I don't want to remove it because it took me a lot of time to dissect, so to speak, the price structure of Johnson & Johnson on a monthly chart. But I want to draw your attention to the two vertical lines that are going to color now into red on my chart, all right? And I'm going to focus only on those, on that price action between the two vertical lines, all right? Here. So you can see this is between the two red vertical line. You can see it's the first wave, second wave, third wave. Where am I? A fourth wave and a fifth wave. Let's start again. First wave, second wave, third wave, fourth wave, and the fifth wave. In fact, the fifth wave, which is the red section here, has been subdivided into 5 minor waves. But as I told you, I don't want to go through it again. And now we have what we call a double retracement, 1, 2, 3, 1, 2, 3. And we were here, you can see the turquoise vertical line. When we were there, I was telling traders that there is a high probability that Johnson & Johnson will start a correction. Now, during that period, there was also a litigation that was brought against Johnson & Johnson Company. They finally won that litigation, and it was a bearish news for Johnson & Johnson, and some people were selling Johnson & Johnson, but we didn't see that correction so far. All right. So now, what that got to do with Wells Fargo forecast for Johnson & Johnson? They believe that the price should go up to $139, up to $141. So the question you have to ask, how long it will take Johnson & Johnson to reach those price targets? Is it short-term price target? Is it medium-term price target? Is it long-term price target? Now, the first thing that you should bring into your mind, usually when market analysts are given a price target, always see it first as a long-term target. It's not going to happen in one day. It's not going to happen in 2 weeks. It's not going to happen in 2 months. You always see the analyst forecast as a long-term target. All right. So looking at the chart, from my point of view, there is a high chance that this stock will pull back at one point in time because of the area weight count. All right. So there was so I don't want to go back from the beginning through all this. I've seen from here 1, 2, 3, 4, 5 waves, and we see a double retracement that is in place, and now the stock is here. There's a high chance that this stock will pull back. But there is one more thing I want to share with you. That's why I'm recording this video today, because it's for technical analysis. You have to understand that the market analysts, okay, are fundamental market participants. They are talking about earnings per share. The earning of the company divided by the number of shares will give us the earning per share. So they are earning a lot of money. Johnson & Johnson, $7.78, all right? And that's a lot of money per share. So if you are a shareholder, you will know that within that earning, you will get a dividend, all right? So this company is making a lot of money. So the earning per share is quite huge for this stock in comparison to the peers. It's a quite bullish stock. It's also a company that's paying a big dividend. So those who are shareholders are holding this stock for years. In fact, they don't like to sell it because this is a stock that is providing growth profit and also dividend profit. You see, the stock has been going up. So we are talking about growth profit. You buy and hold, right? And it's just making money for you as it's going up. At the same time, the company is paying a huge dividend. Do you sell a stock like that? No. So if you bought it at the right price and also at the right time, like here, that's a very, very beautiful, profitable investment that you can hold on to. But talking about the price target of 139 and 149, for me personally, as a technical trader, you may wonder, John, why are you recording the video? Because traders pay attention to what the analysts are saying. Should we discount the analysts' forecast because we are technical traders? No, it would be completely stupid to do that because those people have a lot of experience. So when they come out telling us that there is price target probability that the stock may go up to $139 or $141, they have done a little bit of homework, so to speak, and probably they have spoken to the management of that company and they know exactly what's going on. But for us technical traders, we can't ignore the price action. This is true. We cannot ignore the price action, and because the price is the number one indicator, all right? And in fact, the pudding is in the price, so to speak, all right? So from this point of view, looking at it from the point of view of a technical trader, there's a possibility that we may see a pullback. But one thing I want to show you here, let's bring on our Fibonacci extension. The last price move, the last price move in this session here. Okay, that's the fifth way, yes or no? Okay, I want to apply Fibonacci extension to the last price action. Okay, Fibonacci extension, here it is. And as always, you can see this was the high of our multi-wave. So if you don't know what is a multi-wave, it means that you have to quickly go and subscribe to 24 Elliott Wave YouTube channel to start learning a little bit more about the Elliott Wave, or go to www.24elliottwaves.com. All right. So this is the top of the fifth Elliott Wave, and now we apply the Fibonacci extension to the fifth Elliott Wave, all right, right here. And according to a market stable data, if a financial instrument displays a high and breaks above that high, the next challenge for that bullish progression is which level? The 138.2% Fibonacci extension level. If you don't know what I've just said, you need to go to www.dayprotrader.com and click on 138.2% Fibonacci extension, web page. All right. So this is the level that we were watching. For Johnson & Johnson, you see here, this is the level we are watching. Now, because of the double retracement here, it's a flat correction. 1, 2, 3, 1, 2, 3. So possibility that the price may change direction here. You can see that as the price hit that level of $119. Let's zoom into it because traders say, Joe, zoom into it, please. Apologies to trader, clearing my voice, drink my tea. Very good. So now you can see that as the price hit that level of $119, the technical trader acknowledge that level. Area weight trader starts selling. You can see that for 2 months, the stock struggled to go up, but finally it started going up again. What is the next move? That's a very good question. So analysts forecast $139, $141 for Johnson & Johnson. All right. Always see the analyst forecast Wells Fargo, all right, securities, all right, has forecast price target 139 between price range between $139 and $141. See it always as a long-term target. Can be in 5 years, can be in 2 years, can be in 1 year. Always see it as a long-term target, because a lot of day traders think, oh, analyst says price target 139, all right. I'm going to start buying this stock straight away as a day trader, as a swing trader, as a position trader. But for us as a technical traders, we use what we call a top-down trading method. Without a top-down trading method, one is not trading like a pro. So traders hate me when I say that all the time. They mark the video and say, yo, you shouldn't be saying that. All right, let's move on. Okay, so apart from the 138.2%, the price is now above that level, $119, the challenge for that bullish progression. It breaks above it. Whenever a financial instrument breaks above the 138.2% Fibonacci extension level, you need to pay attention carefully. What you can do is to quickly go and check the economy news, what's going on, why that stock manages to break that level. Okay. The next thing, okay, try to check the financial, okay, perform Google Assist test and see what's going on. The third thing that you should do is to check the S&P 500. Now, if you are a day trader, swing trader, position trader, even an investor, and you do not understand what is the trading triangle, the missing puzzle in the financial market, YouTube search a video by myself, Joe Trio, talking about Google Assist test, or go to www.stochastic-magic.com, click on finance, and then on the drop-down menu, you will see Google Finance Assist test, and watch a video, and you may hear me talking with my funny accent about Google Assist test, okay? But there is another Fibonacci extension level, 161.8% Fibonacci extension level. I need to write a web page about 161.8% Fibonacci extension level. What usually takes place at 161.8% Fibonacci extension level? Breakouts. All right, breakouts, valid bullish breakouts, note it down, often takes place above the 161.8% Fibonacci extension level. So, as you can see here, price breaks above 138.2% level, then it goes to the 161.8% level. For that breakout to become truly valid, so there is a breakout at 138.2%. For that breakout to become truly valid, the price must find a support above the 161.8% Fibonacci extension level. So now, according to Wells Fargo Securities, all right, forecasting a price target in the zone of $139 to $141 for Johnson & Johnson stock. For that to happen, the stock must find a support above the level of $1 to $125.16. So why should I say to traders about Johnson & Johnson? It's quite difficult, very difficult to sell Johnson & Johnson. You must well look for another financial instrument to sell, because it's a high dividend paying company with a high earning per share. All right. Now, so if you want to be bullish, all right, one must give priority to bullish signal above the 161.8% Fibonacci extension level that apply to the fifth area wave on the monthly chart. So that level is $125.16. So for all technical traders, day traders, swing traders, position traders, the level that you need to understand to note down for Johnson & Johnson at this junction is $125.16. Call it $125. Priority to bullish signal above $125, and priority to bearish signal below the $125. So if it breaks above the $125, there are other resistance ahead. There's one here I want to show you, and I'll tell you how I draw it. All right. See the red line here? Pay attention to this red trend line on my chart. You see here? It's a red trend line. So I'm connecting the high of September 2008 and the high of September 2016. So September 2008 to the high of September 2016, you connect those two high and you can draw that red trend line on my chart. So if Johnson & Johnson breaks above the $125 level, there's a resistance, which is the red trend line there. That resistance should be taken out before we can reach the ultimate target of 139 or 141. But as I told you, technically speaking, we have seen 1, 2, 3, 4, 5 area way, followed by a double retracement. That double retracement is still in place. It's not finished yet. So if we start rolling it down, we may see a correction. But for the Johnson & Johnson, because of the characteristic of this bullish cow, quite difficult to sell Johnson & Johnson. Allow me to repeat myself because I don't want traders to get into trouble. All right. The only thing that can really fall this stock down, to be honest, is the market, the S&P 500. So if the S&P 500 start getting very bearish, all right, that may have a negative effect on Johnson & Johnson, though the stock is quite bullish. All right. How long have I been talking to you now? All right. Do you find this video interesting? As I promised you, I will be recording a video about financial ratio relating to the earning per share. Companies that are earning a lot of money and they have a high earning per share, there are ratios that one can use, to pinpoint, bullish stock or bearish stock. All right. You see that the earning per share for Johnson & Johnson is $7.78. That's a lot of money that they are earning per share. Not only that, they also pay high dividend. And investors that are holding this stock do not like to sell this stock because they are buying this stock, they are holding this stock for growth and also for earnings purposes. All right. According to Wells Fargo, the price target is 139 and 149. My recommendation to traders is that whenever a financial analyst, gives a price target, one should treat that price target as a long-term price target instead of a short-term price target. All right. As a technical trader, one must now pay attention to the price action, trade the price, pay attention to the support and resistance level, without violating the trading triangle. Trade first the market. You want to buy stock, wait for the S&P 500 to give a clear-cut bullish trading setup. Is the S&P 500 at a support level? Good. If the S&P 500, the market is at a resistance level or exhibits a bearish trading setup, one should give priority to bearish watch list. All right, and trade in alignment with the market. All right, flow with the market. All right, so this is the end of this tutorial. I hope you have learned something from it, and we put it to use to improve your stock market earnings trading. Remember that Johnson & Johnson plan to report their first quarter earnings in 2017 on the 18th of April 2017. If you have any question or suggestion, all right, this is the moment to put in the comment section, and in due course I will be busy recording another video to answer your specific question. We are the TSTW24 traders talking about stock market earnings, stock set for earning upside. According to Wells Fargo Securities, Johnson & Johnson is due for more earnings upside, in the near future, setting a price target in the range of $139 and $141 zone. One should always consider analyst forecast as a long-term price target. Happy trading to you all, and speak to you soon.